The best way to explain it is it's an erratic bull, like you said. There's a lot of hair out there. There's a lot of unknowns. Things aren't so transparent as we would all like. We're in a secular 2% growth U.S., 3% growth global growth world. And the bull can roam for a long period of time. It gets tired. If there's something that's concerning to the buffalo, it will run the other way. And that's what we've seen, and we're going to be in that for quite some time.
Okay, so the bull or the buffalo is the investor. What is the buffalo doing right this minute? Or what should the buffalo be doing right this minute? Resting. Should be resting.
Should be resting. Should be resting and getting paid to roam, basically. Right now, we've retraced the lows. We were down 10% year to date. At one point, we're up about 12.5%, depending on what index you look at.
So when you say what resting means, I should take some cash off?
You should be taking some profits in some areas that have gotten overextended. We think we're at equilibrium right now. Equilibrium is around 2050 to 2075. That's our target for the remainder of the year. And if you believe in targets and you look towards targets, you should be rebalancing portfolios, taking a little bit of profits right now, matching up against any losses you may have taken at the beginning of the year. And then have some liquidity ready, because over the summer it's going to get quite volatile.
Why? What's the trigger point this summer?
We have something called an election coming.
Yeah.
That looks, rather volatile in and of itself in terms of where we're going. We don't really know who the candidates are. We also have a lot of interaction in the global scene, particularly in the Middle East, whether it's geopolitical scene or if it's on the oil side of the equation. And last but not least, even though the dollar is kind of hung in there, and that's a very good thing. Actually, manufacturing is coming back the other way, and that's why we've moved off the lows. The dollar has a tendency in the summer to strengthen a little bit more, seasonal tendencies to it. So you're going to see corporations come out with earnings this quarter and say, you know what, we're not so sure about the remainder of the year, even though our view is that earnings are going to be okay.
If you wanted to play for yield, where would you go?
You know, you look across all sectors, you know, a good portion of the high quality, higher yielding, more safety areas are overvalued at this point. And you know, when you look at the indexes, utilities, you roll up those indices and you say, if I own the index, it's overvalued. But there are companies in the different sectors that you still can. And I would argue this: you look at capital light companies, high cash rich, can withstand a stronger dollar, are global reach, and are exposed to the consumers have money. That's what you want to own.
And those are going up, or they're just hanging in?
They are doing both. They've gone up. They've outperformed on this rally back off of the lows. They've outperformed pretty well. Matter of fact, the hedge funds that were owning a lot of the momentum names, the over-owned names, they've underperformed significantly.
Okay, on that front, what are you doing and what are you telling your clients who want to be in the hedge fund space right now?
Well,
given not only the volatility, but frankly, the terrible performance, at least among some of the biggest names.
You know, you have to ask yourself, why are you investing in those areas? Why are you investing in alternatives? Usually, you know, 10 years ago, 15 years ago, I want excess returns. The reality is it's really dampening volatility. You want to dampen volatility. You want to allow the core space to produce market-based returns. And then outside of that, you want to dampen volatility in other things. So when you have these 15% moves, that's not your portfolio. Your portfolio is not enduring a 15% move. Global event-driven, global macro, those areas, given the volatility we have across rates, equities, and currencies, are the areas that we like.